Thanks for joining the Level Up team as we have another roundtable discussion. Today, we are going to be talking about whether or not you think the market is going to crash. Jennifer, let's start with you.
A lot of people are concerned about a housing bubble and housing crash and what that's going to do. I think that prices are going to continue to go up, but not as aggressively as they have in the past. We've talked about how interest rates are going up, but I think everything is just going to stabilize. It's not what we've seen in history in 2008, where the market just crashed. Like, that's just not what we're looking at right now.
Yeah, this is a completely different market than we were in 2008. I agree that I think things are going to slow down and level off a little bit. The whole point of the interest rates increasing is to try to pull more buyers out of the market, which is what I think we're starting to see. We're not having as many buyers, but it's not enough to pull the prices down drastically. What I think is happening is the prices were going up so fast, interest rates are now going to pull those back down. I think they're going to start leveling off at some point. But there's no real indication that I'm seeing that we're going to expect a housing crash.
Yeah, I don't see a crash or a bubble per se. I definitely agree with everything you guys are talking about. I think you'll start to see a taper down in activity. We're already seeing it some versus 20 offers. We maybe are getting 5 offers. The demand is still there, so there's still a lot of demand. I think you are going to see prices, and of course all this is always price point sensitive, but I think you are going to see prices kind of taper and not experience double-digit growth maybe. You're still going to have 5+% price appreciation, but you're probably not going to see 20%, 30% over some of the craziest we've seen over the last few years. And so I think you are going to see things calm down a little bit, slow down a little bit, but it's just going to feel like it's a bigger change because of how crazy everything has been over the last 2 years. When you look back, I can nerd out on all the data. When you look back at the last 5 recessions, if we go down that path, of the 5, 3 of them, homes continued to appreciate in those marketplaces. Obviously, the one most drastic in 2008, housing caused that recession. I don't think we're anywhere close to that when you look at inventory levels, when you look at demand from a population growth standpoint, lack of new home construction, all these crazy factors out there. I don't think we're anywhere close to repeating that. I think we're just going to see a little bit of tapering and calming in the market. My thoughts.
I definitely agree with everything that y'all are saying. And I also want to add in there that I think the biggest difference of why we're also not going to have a housing crash like we did in 2008 is that people have so much equity in their home. Rather than people putting on 0%, 5% down, we got people putting on 10, 20, 30%. And even if home prices start to taper a little bit, they still have so much money in their home, they're not going to walk away from that. So that's my take on, our take on, whether or not the market's going to crash or not. We've talked about this more in detail in other videos. We're willing to talk more in detail with you. So feel free to reach out to any of us if you have any specific questions about the state of the market or where it's going in the future.